Hey, it's no secret that inflation is out of control. And although the Fed keeps raising rates to combat it, most analysts are expecting a recession in 2023. As traders, that could be devastating, or is it? In this video, let's talk about what to expect in 2023 and how we can navigate it profitably as traders. Let's talk about market conditions. Right now, here we are at the end of 2022. We're in mid-December, and we're looking at the market, and we've seen this great run to the upside. And we had this little bit of a rollover take place, a couple of days to the downside. Today is actually the very first day we've took a small bounce to the upside in comparison to what we've seen over the last 5 or 6 days. And that overall bullish move that has been going on now for a couple of weeks is a part of a bigger long-term bearish pattern, where the market had been coming down and we're just on that bullish leg right now. We're seeing inflation is ticking up still, right? We're starting to see some recovery on unemployment. Was a good announcement today. We're looking at the PMI was okay, Purchasing Managers Index. We're looking at PPI and CPI coming out this Friday and Monday. And then the following Wednesday, just 2 days later, right, we're looking at the Fed announcement to see that on that pivotal announcement, where we go and what that next step is. And there's a lot of concern from not only the market, not only from traders and investors, but people as far as what's going on with interest rates. I mean, guys, you look at things like I bonds, they're paying 6.89% right now. Inflation bond, 6.89%. Government-backed monies where your principal is protected, guaranteed, right? And very little cost, even if you took the money out early. Right? There's so high of an inflation right now. So what are we expecting as far as 2023 to bring for us? Guys, I still think we are going to see another increase next week, at least one more after that. So the question is going to be, is it going to be 2 1/2 point increases or 2 3/4 point increases or one of each? I don't know. But we are expecting to see it go higher. And there are some Fed presidents that are saying we need to see the Fed funds rate go to at least 5 to 7% to curb inflation. Right? Which can become a major problem. Right now, there's not a lot of people that were in the market in 2008 the way there are today. A lot of those traders washed out, they're gone, they're done. Today, it's a different breed. It's younger, less experienced, less knowledgeable, less money in many cases, right? Because they are a younger generation that's putting their monies in there. In 2008, we had a skyrocket moving up to that crash, which took a couple of years to recover from. Is it going to take that this time? I don't think so, right? Things are in a better place, I think, than where we were, but there's a lot of outside factors that we have no control over. That was a US-based problem, right? 2008 was a US-based problem. We can't say that here. Look at what's going on in Asia, right? Whether it be China or Taiwan. Look at what's going on with Russia. There's so many, Iran, right? There's so many places around the world that have something happening, right? What if we go back to Greece defaulting again? I mean, we had the euro almost crash because of Greece, who's a very small percentage of the euro, right? They're one of the smallest ones, and we almost crashed the euro because of their defaults, right? So when you look at 2008, you look at now, there are some comparisons, but I think this one here, we've got a chance for not as long of a doom and gloom type scenario. But, we are going to deal with some pain for just a little while. Now, let's look at the VIX. The VIX is the volatility index. I call it the fear factor, right? What does that mean? Well, when fear is up, when the market's going down, the VIX goes up. So it's an inverse relationship to the market. So when the market goes up, fear comes down. It works in reverse, right? Right now, with all the concern of what's going on, we had a VIX that was higher than it is today, more in that 30, 35 level. We're in the lower 20s right now, 22, 23 or so, which is a great VIX level, right? We don't have a lot of concern there, but is VIX going to come into play? You need to watch VIX very closely. You should never be checking out the S&P or the NASDAQ, depending on which one you look as a primary. If you're a NASDAQ trader, then NASDAQ would be fine, but I still think you should be looking at the S&P as the primary. But you should never look at the S&P without looking at the VIX at the same time. You always want to use them in conjunction to each other to make sure what one is confirming on the other. When you see the VIX is going up and the market is going down, something's off. Why is fear getting higher and price, the S&P, is going up? It shouldn't be that way. But we have had scenarios where we've had that divergence in what should be happening take place. So just to try to wrap that piece together, if you have the market going up, you would expect to see the VIX go down. Now, you may have a small hiccup where it goes up 1 day or 2 days. That's okay. But if the market's going up and the VIX is going up, it says fear is rising, but the price is going up. Right? So you want to look at what's happening in conjunction between the two and sit back and go, all right, wait a second. I don't like this. Something's wrong here. We need to check that out. What strategies will I be using to trade during a recession? It's pretty simple, right? When you have market conditions that are uncertain, and no market condition is 100% certain, but when you're up for 3 days, down for 2, up for 1, down for 1, up for 2, down for 3, and we're all over the place, and usually that reverse move is big. Well, I don't want to be on the wrong side of that. That is a slap much worse than any other slap you're going to get. So the strategies I will focus on are very straightforward. I will shorten my time frame, which I've already done, to intraday setups. I'm not talking about a day trader getting in and out 52 times a day, trying to pick up 5 cents. That's not what I'm looking to do. I don't want to buy 10,000 shares of Microsoft, trying to make a nickel on each one. I am looking for very clear and concise entries at key levels with very precise targets and stops based on a rules-based system utilizing my strategy creation system. Identify, enter, manage, exit. Simple to understand or to hear. Toughest thing you'll ever do as a trader is to build out a successful system like that. So very short term on my intraday trade setups. The second thing will be selling strategies. As a buyer, let's say it's a stock. Forget options for a moment. As a buyer of a stock, if the stock goes sideways, you don't make any money. You're losing money actually because I've invested in that stock. I can't invest in something else. So if the stock goes sideways, I'm losing. The stock goes down a little bit or a lot, I'm losing. The stock goes up a little bit, yeah, I win a little bit. If it goes up a lot, I make a home run out of it. With an option, if the stock goes sideways, I'm definitely losing. Why? Because the value of the option is decreasing. The time is going away, right? Well, when I am a seller, I have a 4 out of 5 chance of being right. So let's say that I sell a naked put. And as an example, I would sell a put if I am bullish on that position. I think the stock is going up. All right, so if the stock goes sideways and I got paid premium, the option's going to decrease in value. As a seller, I like it. I like it a lot, right? I want that. I'm making money. If the stock goes up a little bit, I make money. If it goes up a lot, I make money. If it goes down a little bit, I still make money. If it goes down a lot, I might get in trouble. It all depends how I hedged myself. So the strategies are buying calls and puts on stocks that I know and use over and over again, short term, and selling strategies such as credit spreads, naked puts, and covered calls, diagonal spreads, things that I can hone in on and get a very clear and concise system for taking that trade. There have been 11 recessions since 1948. And as long as you are smart with your trades, trade with the market direction, and stay conservative, you can ride out this recession too. Until next time, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and remember, you're just one trade away. Trade safe and check out the training right here.